Hi friends, Simit here from InformedTrades.com. It's June 18th, 2014. Time for our daily Forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I put on the markets, all part of helping traders learn. You can learn from my mistakes, learn from my successes. We can all learn together. My style of trading is price action swing trading in the Forex market off the daily time frame. If that terminology is unfamiliar to you, or if any of the terminology I'm using is unfamiliar, check out InformedTrades.com. We have a huge archive of learning material designed all the way from those who are completely new to trading, unfamiliar with all the terms, how to place an order, things like that, all the way to more advanced methodologies, more advanced analytical methods. Check it out, share your knowledge, ask questions, set up a practice account. We can all sort of trade together, learn together, and improve together. Okay, so let's take a look at the charts. Okay. Let's start with gold, which I usually like to start with, as that's my primary holding over the long run. I'm a little less concerned with the day-to-day movements. However, I'm very concerned with the long-term movements. A couple interesting things to note here on gold. We had a gap here. I would interpret that as a novice gap. But then we had a lot of gaps here. A gap here, a gap here. I mean, this could all be interpreted as, it's like novice gap and then a few more novice gaps. I don't know. We'll see. To me, I think the gaps are interesting. I'm not sure what to make of, back-to-back-to-back gaps. What I am interested in is seeing 1260 defended, or I do think seeing if that level will be defended. This long wick here, to me, suggests an initial sign that perhaps bulls are stepping in at this level to push price up, but I don't know. I think more evidence is still needed, and I don't think the bulls have won the battle of 1260 just yet. If 1260 breaks, which is still very possible, I would expect price to head down to 1180. Again, really, in the long term, I'm happy to buy and I'm continuing to buy between 1180 and 1280. I've been acquiring gold over the past few years, or since 2008, really. So over the past, 6 years. I'm almost done getting all the gold I want. I am using this as sort of a last opportunity between 1180 and 1280 to finish up buying what I want, and then holding on to what I anticipate will be new all-time highs, well past the all-time highs we saw in September 2011. Anyway, that's gold. 1260 is the next key battle. Let's see if the bulls can defend support here. If not, I think that strengthens the argument for bears gaining momentum down to 1180. On the upside, the bulls still need to clear 1310, still need to clear that 200 exponential moving average before the odds are decidedly in favor of the bulls. Okay, so that's gold. Let's take a quick look at Bitcoin. We are bouncing off here. We did have, so this breakout here, this swing low, we were in a range for almost 2 months here, or a month really. We broke out. We had resistance at 680, which was established here. On Q, price started retracing from that. We have had a 50% pullback from this swing low, this swing high, and now price is rallying. So I think that's pretty favorable. Again, we also prices above the 50-cent moving average and the 200 exponential moving average. We just had the 50 cross above the 200. So I still think the bulls have the upper hand in Bitcoin so far. I would want to see really 520. I mean, I think if we, the closer we get to 520, it's a better buying opportunity. If we go below that, I'd be a little concerned the bears have regained momentum. Next time we go to 680, in order for the bulls to have the momentum, I would like to see that level cleared. And again, just to clarify, I have a very small position in Bitcoin. I'm viewing it as like a lottery ticket. Even if the position goes to zero, it's obviously never fun to lose, but within my risk tolerance, if it goes much higher, then that'll be a great winning for me. So I'm using it a bit like a penny stock. Okay, now 2 orders I put on today, Australian dollar. They're both long the Australian dollar, and that's one of the things I'm looking to do to minimize my losses or increase my win rate. And I am positive for the year, which is good. I was negative for the year, but now I'm about 1% positive, a little under 1%. So still have a long ways to go. I want to make that much better, but it's nice to be in the green. And one thing I realized that I just had too many losers that I need to filter out. My reward risk was pretty solid, and that's good. If I increase my win rate just a little bit, I think that'll make a big difference. And one way I'd like to focus on to do that is to really look for trends that are occurring across the board for a currency. So I want to see, when I see, for instance, as the chart we're looking at now, Australian dollar, Canada dollar, if I see a long sign here, that's nice, but I really want to see other signs that the Australian dollar is strengthening. And then when I see more than one, when I see the Australian dollar strengthening on or weakening or the same opportunity on multiple currency pairs against multiple currencies, to me that's like, all right, this is more likely to be legit. I think that could be something that is a decisive factor in increasing my win rate, filtering out some losses, and still getting me in on the good trades that I need to be part of. And that is what we see on the Australian dollar. So Aussie Canada, just to illustrate, price is below the 50 simple moving average here, but we're pretty close. And in general, when price is close like this, I don't view it as a decidedly bearish trend. I still think we have an uptrend here. If you look back to the start of the year, price has been rallying. So we'll see. Today is a big announcement out of the FOMC that's going to could potentially impact the dollar, which could reverberate to all other markets everywhere, the U.S. dollar that is. But here, what happened is we had this swing low. Then we had what could be this swing high. Price has completed a 50% pullback to here. This support level was established or reestablished in May of 2014, also established here, April of 2014, and even here, March of 2014. So March, April, May, and now June, this could be a support level. If we look at the 4-hour chart, we also see that price is rallying from the support and the 50% Fibonacci retracement. So that I thought was interesting. Let's go back to the daily chart. I'm entering here at 101.40. My stop is at 101.10, so I'm risking 30 pips, targeting 103.35. If you look at the reward risk, which you can see there, oh, they didn't list it. Well, it's about 6.5 to 1. I think you don't see it because these lines are too close. But it's about 6.5 to 1, which is a really nice reward risk. I'm happy to take that. That's good. The break even I'll move at if price closes at or above 102.08. I will move my, that's a resistance level. If price clears at or above that, I will move my stop to break even and de-risk the trade there. So that order has been placed. Let's see if it gets filled. Aussie US dollar. Very similar. We have an upwards trend line, right? We had a 50%, we had this swing low to this swing high, 50% pullback. We're right above the 50 simple moving average here. And so we have a bunch of signs here. Trend line, 50% Fibonacci retracement, 50 simple moving average, at a support level that goes back to here, right? It was sort of a little bit established in May and here as well in April. So that's all good. The trade here is entering at 93.30. My stop is at 93.02, so risking just 28 pips. My target prop is 94.28, so looking for 98 pips. Looking for 98, risking 28. We divide those numbers. That gives us a reward risk of 3.5 to 1. So not as good as Aussie Canada, but still pretty solid. It's 3 to 1 is my bare minimum really. So that's the trade here. The one thing that is a little concerning is that we do have the FOMC announcement coming out today, which could, do something. It could make a big move either way. But technically, I like the setup. I don't really like to look at the news on my active Forex trades. I do like to keep it in mind for bigger, longer-term opportunities, but not for the active trading. That's where I'm holding positions for only a few weeks or a few days. For macroeconomics, I really factor that in if I'm going to be holding something for years. That's about it. Any questions you have, anything you want to add, join us at InformedTrades.com. I also have my trades, these trades documented on the blog there. So check that out. Ask any questions if you have any. Best of luck in your trading, and we'll see you tomorrow. Take care.